Well, as we promised a couple podcast episodes ago, here we are doing another deep dive into crypto and kind of taking a new look at it through the lens of the upcoming administration and everything that's changed over the past several weeks. So crypto's been in kind of a funk for the last year or so. You know, there's a bit of a push in prices, and then that kind of fell back and has been kind of taking sideways for a long time for a number of reasons. One of the big ones being high interest rates. But, you know, today I want to just take a step back. Let's go through it top to bottom, what the situation's looking like, and where we expect that to go from here.
Yeah, and I really want this to be not a in-depth, in the weeds crypto conversation. I want it to be high level. I want for our listeners, our viewers who just, aren't super familiar with crypto to just get a good idea of what it is, what it means. I mean, it got really popular, a year ago, certainly during 2020, 2021. And we just want to bring it back up because we think, under this new Trump administration, they're going to be a little bit more crypto friendly. And so just giving people an idea, because when it's talked about more, we think that it's probably good to have some foundational knowledge about it. And so whenever we say cryptocurrency, we're essentially talking about cryptocurrency is digital money. And so the primary cryptocurrencies that you might think about are, Bitcoin and ETH, which is on the Ethereum blockchain. There's others like Solana, Cardano, and some other cryptocurrencies that have become very popular, but we'll kind of stick with Bitcoin and ETH as far as the main ones. Those two have the largest market cap. And what makes it a cryptocurrency is, like I said, it's digital. So there's no tangible aspect to a cryptocurrency, and it's powered by blockchain technology. And so blockchain utilizes cryptography, which hence the name cryptocurrency. And the beautiful thing about cryptocurrencies is that they rely on a trustless system. The blockchain that backs cryptocurrencies is on what we would refer to as a public ledger that is distributed across the world. So it doesn't exist in one single place. You don't have to trust a single entity to maintain that ledger. It's agreed upon thousands, probably millions at this point, of devices, verifying one continuous blockchain that does not have to be trusted, because you aren't having to put your trust in a centralized entity like a bank or like a financial institution or something like that.
Yeah, like you said, it's permanent and it's public. So this is actually a great thing for, you think about financial fraud, misbehavior, all of that stuff. It is anonymized. So your wallet is a string of characters that doesn't have any identifying characteristics necessarily, but you can track where all the money's going to. And so that's proven as a very useful tool to actually combat a decent amount of financial fraud or misbehavior. Because people generally think of crypto, oh, that's just for drug dealers or bad actors or something, And I think that misconception is kind of fading into the past at this point. But I think it's worth pointing out that actually, in a lot of ways, being a public system means that it's audited by those millions of computers that you were talking about, and is available to be further audited by any of the government agencies around the world to find and seek out those bad actors.
And all of those transactions being public on the blockchain is also important, because those transactions, those blocks, cannot be changed once they're established on the blockchain. And it's referred to as a chain because each block on the blockchain carries a number of transactions. So if I were to send you digital money, Ether, Bitcoin, that would be an entry on the blockchain within this block. And so a block essentially fills up with transactions, then it is posted to the blockchain confirming the transaction. And each block has a link to the block before it, kind of like a timestamp, that continues that chain of blocks. So as long as that all of these computers agree that on this, massive blockchain, whether it's Bitcoin or Ethereum, that these transactions are valid. They're posted there and they cannot be changed later in time. So there's no reversing a transaction. There's no changing the details of it. You can't act like that I sold you an NFT or transferred something to you when I didn't. They're posted publicly and it's verifiable. But at the same time, there's a certain level of anonymity to blockchain technology because all you need in order to send payments or do smart contracts is a Bitcoin or Ethereum address. And that's going to be essentially your identifier in order to do this. So by having one of these wallets, you can interact in these transactions. There's no personal information needed. You don't have to submit your social security number like you would to open a bank account. And so there is this level of anonymity, but also verifiability by keeping that blockchain intact.
And one key thing that I want to keep coming back to during this conversation is relating it to people back to traditional financial activities, because I think a lot of people have the idea that, cryptocurrencies and dandy and what all, but it just exists on the internet just for people to transfer stuff around, but there's no real world use to it. There are actually a lot of real world uses. And that's, something I want to keep coming back to is just kind of mirror these things versus what you'd find in a traditional financial transaction. I think one good example is that, some of the largest companies in the world are actually using their own private blockchains to achieve something cheaper, faster, and easier than the traditional way of doing it. JP Morgan has one of the, if not the largest blockchains in the world. I think they still hold the title for the most value transacted on a blockchain. And it's their private blockchain that they're using internally to settle accounts and move money around that way, which just enables them efficiencies. So, it's a real world application of this technology that, we can leverage, with those public blockchains. But, it just kind of goes to show that there is real value here. Walmart is similar. Even Walmart, they're not even a financial institution. They're using a private blockchain to, track mangoes and stuff. So, it's the verifiability, the permanence, and there are a lot of characteristics that make it really good for just traditional means that you can now perform better.
Right. You're able to post information to this public blockchain that's going to be there forever. If you don't want to worry about, say it's a deed to your house or to your car, it's not going to burn up in a safe or get lost by a financial institution. It's there, it's verifiable, and it's secure. And so those are kind of the main benefits of it. And I'd love to kind of go through, I mentioned Bitcoin, I mentioned Ether, kind of talk about those as your kind of foundational cryptocurrencies and the differences between them. So I'm sure everyone is, if they're not familiar with Ether, I'm sure everyone's familiar with Bitcoin. Bitcoin was kind of your first mainstay cryptocurrency. It's the most established, has garnered the biggest following, has the highest market cap of any cryptocurrency. And the way that I like to look at Bitcoin is like digital gold. It has that store of value in the crypto space. And while it's not the most efficient blockchain for transactions or smart contracts, it's always going to be looked at as that store of value. The technology evolves a little bit slowly on the Bitcoin blockchain as far as new implementation and things like that. But everyone feels confident about Bitcoin, one, because it's been around for so long, and two, because there's a fixed supply. There's only 21 million Bitcoin that can ever be mined. And so you've got this fixed supply out there. And so there's no worry about, hey, it's going to inflate too much or decrease in value because the volume or the number that's out there is going to substantially change. Because once all those 21 million Bitcoin are mined, there's no more. And so you're able to put kind of financial backing on that without the risk of like huge changes in the supply. And I think Bitcoin, as far as store of value in crypto and just credence to the crypto industry, is probably where you're going to look at Bitcoin. So really just likening it to that digital gold.
Yeah, exactly. Like you said, a really good inflation hedge. Kind of a lot of reasons people own traditional gold, which has had a great last couple of years during this high level of inflation period, because gold doesn't inflate. And same thing with Bitcoin. It's an easier way of holding a physical asset. And one of the great use cases of something like Bitcoin, for example, is, you have great story come out of the war in Ukraine, where, you have people fleeing from these battlegrounds with very little in the way of possessions. So you're walking across international borders with basically everything you own at this point. But then, this person in particular had a wallet address memorized, and they just know what their wallet address is. They get to somewhere safe, and now they have money again. That's something where you don't have access to the traditional banking system in the country you're fleeing. You can't carry large amounts of gold or valuable possessions across borders through war zones, without risk of losing it, getting it stolen, the physical burden of just the weight of it all. But that ability to just have that, as the emergency, ease of use of gold. So I think, Bitcoin really fulfills a lot of the plus sides of gold, but also has that ease of transport aspect to it as well, where you don't need something physical. And so moving on from that, take a look at Ethereum, the second largest cryptocurrency, Ether, is viewed a lot better through the lens of being the gas of the crypto economy. And so whenever you're transacting on the Ethereum blockchain, which is the largest financial chain, or really good for the smart contracts you were talking about, when you're trying to do more stuff with your crypto, a lot of the DeFi apps sit on the Ethereum blockchain. You're spending Ethereum to make those transactions post to the blockchain. And that's it's really what runs that ecosystem. And so it's a consumable thing with a relatively fixed supply. Yes, it can inflate and deflate a little bit, but there are mathematical guardrails around that. And that's a big thing, is that Bitcoin, there's a fixed cap amount of Bitcoin. It's slightly inflating as it gets mined, but it's at a fixed mathematical rate. So you're not worried about hyperinflation or overinflation. You're talking 0.5% to 2%, there. Same thing with Ethereum, is it can fluctuate a little bit more than Bitcoin, but you're really locked into these mathematical guardrails to keep a fairly stable supply and just an expected amount of supply.
And I think that gets us into really some of the benefits of these cryptocurrencies is what you mentioned, inflation protection. This is big because they're not tied to any single government. So there's no central bank. There's no fiat factor to this where the government is giving credence to these cryptocurrencies. Of course, some people may view that as a risk because you don't have the backing of, say, the US government or a European government behind this. It is based off of the global community actually using these cryptocurrencies and providing them value. But I think it's important that it's detached from any government because, to your point, whether there's war, whether there's poor fiscal decisions, whether there's bad central banking decisions, this is going to exist beyond that, and it's not linked to one economy as far as who's going to use it and who's going to give it value.
And then along with that, there's the broad accessibility of it. You don't really need a whole lot to make it happen. It's actually easier to get access to this than a lot of traditional financial systems. You talk about underbanked communities or third world countries, second world countries, kind of, out of that traditional ease of use banking system. It's becomes a lot more accessible for people to, transfer wealth, especially internationally. Like I mentioned earlier, I want to bring these things back to real world applications. Talk about sending a wire transfer. Sending a wire transfer in the first place is a painful, stressful experience, and it's also not cheap. But talk about sending one internationally, and you're talking about way more hurdles to cover, where with, a transaction on the Ethereum blockchain, for example, it takes a few seconds, it costs a few cents, and you have, like I said, instant settlement, and the ease of use is there too. So, you have that accessibility, but you also have the immediacy of it, just lots of benefits there.
Yeah, I agree. And the good thing about those transactions too is the cost efficiency of it. I mean, you mentioned a Ethereum transaction. Those have gotten down, especially when you're talking about the majority of transactions being placed on there for in the few cent kind of cost range. So, I mean, it's very cost efficient. You're not having to spend huge amounts to conduct these transactions. And as the blockchain technology, especially on Ethereum, because it really is kind of the city roads and the pipelines for the crypto industry, is the more and more that the technology improves, the cheaper those transactions get. And we've seen those costs dive substantially from when you and I started using Ethereum. And so it's becoming more and more accessible for more and more individuals. And I think the interesting part is as it continues to develop, eventually we're going to start using these applications with a user interface that looks very familiar to us, say, an app on our phone. I mean, it's already getting kind of like that. I know that a lot of crypto wallets have app functionality, and so you're not really changing the user experience that much from, say, a traditional bank. It looks and feels the same, and I think it's just getting easier and easier for the consumer to use.
And that's a recurring thing I've heard in the crypto industry, is really that focus on user experience. Because if you know what you're doing and you're already set up, it can be a pretty, like you said, easy, traditional feeling experience. There are a lot of hurdles in a lot of places to be cautious when you are getting set up and getting used to it. So that's always tough. And that's something that the crypto community is really working on solving. But again, when you have a 5-cent transaction, it makes it really easy for me to test out the transaction. If I'm sending you $10 for lunch or something, and I've never sent you money before, I'll send you 5 cents, cost me 10 cents. And, oh, you got it. Okay, great. I'll send more. There are ways to get around it. And that's something that we're really, the community is really working on addressing right now. Moving on to, kind of where we're looking. What's ahead of us. An election just happened, and there are going to be a lot of implications from that. And something I think is potentially one of the biggest ones is crypto regulation. And so good news for crypto is that, both sides of the aisle, there are proponents, and crypto now has a majority in the House. And then with Republican control of the Senate and the presidency, you have a very crypto-friendly situation going on. And then you have your traditional anti-crypto crowd, kind of Gary Gensler and that bunch, that aren't expected to stick around post-inauguration. And so it's that, balance of, it's a crypto-friendly administration and kind of your crypto, I don't want to say crypto enemies, but, people who are definitely anti-crypto leaving those situations.
Yeah, that's going to be huge. I think crypto's become a more bipartisan issue as the benefits of cryptocurrency and blockchain technology have come to the forefront versus, what looked like some of the sketchy aspects. People are recognizing the benefits of it so much more today. So it has become more bipartisan, a little bit more on the Republican side as far as pushing crypto initiatives. But to your point exactly, I think lower regulation, better clarity on the regulation side as far as, hey, is it a security? Is it a commodity? What are we dealing with? Because anyone who's tried to do taxes, with crypto transactions is very, very difficult. Not a lot of clarity there. So that's going to be really big over the next 4 years, is establishing that and bringing a lot of the crypto development and technology back to the US. Previously, or so far, our crypto policy has made it really hard for developers, coders, people building these applications to do that in the United States because of just how strict the regulation is. So what we want to do is take those coders, those developers that are currently doing this in other countries, bringing them to the United States and helping this amazing technology take off here. I think that's going to be a huge part of it.
It's going to be huge for the US, but also for crypto in general. American exceptionalism is a real thing that we see in markets time and time again. And I think adding all of the dollars and intellectual capabilities that America has to offer into that crypto space is going to be really powerful for all of that. Back on the regulation thing, I think we will see more regulations, but it's going to be regulations of, like you said, clarity. It's going to show people, here are the rules of the road. You know what to work with. And as long as you stick in your lane, then you're going to be okay. But what we've seen right now is a whole bunch of gray area everyone's been having to work in. And there are no rules being made until the SEC decides that they're going to sue somebody for an issue. And so now your cost of rulemaking is in the $20 million plus range of you just get sued for it and you have to pay a big fine. And then now everybody else knows to stay away from that. So I expect to see more regulation, but just very clarifying regulation.
Exactly. Couldn't have said it better myself. Hunter, I think we did a great job breaking down crypto markets for everyone.
Great. Thanks.